Okay, so first question they're asking which of the following statements best describe the primary purpose of financial accounting in a firm? So the correct answer for this is provides the information to the external stakeholders for decision making. But here it says the external stakeholders. Ne? So from these answers, you have to get the best described answer. So that's mean the most appropriate answer. So from all five answers, this is the best answer that we can get. But if it is says that provides the information to the external and internal stakeholders for decision making, so that is the correct answer. But from these five, you have to get this provides the information to the external stakeholders for decision making. So the answer for question number one is answer five. And second question, which of the following accounting concerns leads to non-recognition of air pollution arising due to the business activities of a firm in the financial statement? So, air pollution is a qualitative information. It's not the quantitative. So that means we can't measure that in cash. So we have to record only the information that we can measure in cash. So that's what it's called from the money measurement concept. So non-recognition of air pollution arising the base accounting concepts is money measurement concept. Third one, which of the following accounting concepts provide the basis of making an allowance for doubtful debts at the end of the year of a firm? So doubtful debts, so doubtful debts is an expense. So when we are recording the expenses, so the relevant accounting concept is matching concept. So from the matching concept, it says we have to record the all expenses that are relevant to the current income, and we are doing the doubtful debts before the actual bad debts happen. So that's mean we are ready for some expenses, so that expenses that can be. So for that, the relevant accounting concept is prudence. So matching and prudence is the correct answer for the third question. And here, use the following information to answer number 4 and 5. So these are the full detail question. So there are details. So first, keep in mind you have to read the question first and then go to the details, right? Again, question එක කියවලා then details වලට යන්න. මොකද question එක කියවම you have in your mind that what are they asking. Then after you are getting the question in your mind, then after you are reading these details, then you can figure out the answer directly. හරි එහෙම නැත්නම් අපිට සෑහෙන වෙලා යනවා. ඒ කියන්නේ අපි detail එක කියවලා ආයි question එක කියවලා කොහොමද අපි අනිවාර්යෙන් detail එක කියවන්න ඕනේ. ඒක නිසා හොඳම දේ තමයි first read the question and then go back to the details. Right? So, which of the following primary books are used to record the purchase of motor vehicles and the sale of motor vehicles? So, here the Mikirani PLC, they purchased the motor vehicle, it says on credit. Huh? And these 10 million motor vehicles, from that 2 million motor vehicles was sale, you purchased for the office work. So that means from that 10 million, 2 million is property, plant and equipment purchases. So that's mean because that 2 million worth of motor vehicles you purchase for intention of using in your business, and the other 8 million you are purchasing on intention of reselling. So the primary books for those, the purchases on intention of reselling is you are recording under purchase journal because these motor vehicles you purchase on credit, and the purchases on intention of using in your business you are recording in general journal. So the purchases answer is purchase journal and general journal, and here the sale of motor vehicles happens on here it says sold on cash. So when you are doing sales on cash, you are recording that in cash receipt journal. So the correct answer is number 5. So next question number 5, they are asking which of the following accounting equation reflects the net effect of all transactions. So here, the first transaction is you are purchasing 10 million worth motor vehicles, so your liabilities are increasing. But from that 10 million motor vehicle, that 2 million motor vehicle you are purchasing for your intention of using. So that's mean the non-current assets are increasing, and the other 8 million you are purchasing on intention of reselling. So that's mean it's your stock in your business. So current assets increasing by 8 million. And the depreciation happens. So when the depreciation happens, your non-current assets gets reduced. So non-current assets minus 100 and the depreciation is an expense. So that minus from the equity. And the other transaction is you are selling 3 million worth your stock for 4 million uh, in cash. So current assets minus 3 million. So your stock is going down 3 million and you are selling that for 4 million. So your current assets is increasing by 4 million because you are selling this for cash. And the profit that generated from that transaction is you have to record under equity. So your correct answer should be non-current assets increased by 1900. Current assets increased by 9 million. Liabilities are increasing by 10 million and the equity are increasing by 900,000. So the correct answer for question number 5 is answer 2. Question number 6 and 7 they are asking from this case study. Question number 6 they are asking the source documents that in the order of the transactions happened. So first Amal Limited they sold these stocks for 672,000. So the source document of credit sales because this happens on credit. So the credit sales source documents is sales invoice. You are recording that in the sales journal. And then the Sunimal traders, the buyer of that goods, they return back to the business. So when the sales return, when the credit sales return back to the business, the source document for that is credit note. And after all, Sunimal issued a check for the payment. So that's mean from the Amal Limited point of view, you are receiving cash from Sunimal. So receiving cash source document is the receipt. So the correct order is invoice, credit note, receipt. And so the answer for question number 6 is answer 2. And question number 7, they are asking the correct double entry to record the goods sold on 15th March 2022 in the books of Amal Limited. So keep in mind, if it is if it that organization is registered for the VAT, you have to exclusive. So that's mean you have to get deduct the VAT from the total amount. So here the 672,000 is given with VAT, with 12% VAT. So you have to subtract the VAT from this amount, and then that is the amount that you should record in your sales. Because when that organization is registered for the VAT, you can't record the purchases and sales with VAT. You have to subtract the VAT from the total amount. So here the 672,000 is the total. From that you have to get rid of the VAT. So that means 672,000 you have to divide by 112 and then multiply by 12 to get the VAT. So the VAT include in this 672,000 is 72,000. So that 72,000 VAT you have to record separately, right? So when you are selling stocks and then that means you are collecting VAT. So that collected VAT is your liability because that VAT you have to pay to the government. So the correct double entry should be debtors debit the total amount 672,000 and VAT credit 72,000 and sales should be credit the amount without VAT 600,000. So the correct answer should be fourth one. And here, again, details, and from the details, they are asking the answers for question number 8 and 9. So 8, they are asking which of the above errors have led to the balance in the suspense account. And the other main question, so that's mean from question number 9, they are asking the suspense account balance and the affection of the profit. එතකොට මේ වගේ ගානක් දුන්නම you have to do the double entries to the corrections. ඒ කියන්නේ අර අපි පොඩ්ඩක් මේ workings වල පොඩ්ඩක් ලියා ගන්න ඕනේ මේකේ තියෙන double entries. So first, A, 100,000 paid for the electricity expenses has been correctly recorded in the cash account, but it has not been posted to the electricity expense account. So that's mean the double entry of that is electricity debit and cash credit. So they recorded in cash account correctly, but they didn't record in the electricity expense. So the correct double entry for that is electricity debit and the suspense account credit, right? And the second one, the total of discount allowed column of the cash receipt journal 30,000 has been recognized as bad debts. So the total of discount allowed in the cash receipt journal, the double entry of discount allowed is an expense, right? So the discount allowed debit and debtor should be credit me. But the discount allowed they recorded as bad debts. So the double entry of bad debts is bad debts expense debit and the debtors credit. So the main transaction they came. So that's mean when you are recording the discount allowed and when you are recording the bad debts from both transactions, debtors are crediting, right? So the here the case is you should debit to the discount allowed expense account, but instead of that, you debit it to the bad debts account. So that's the difference, right? So when you are correcting that, discount allowed debit 30,000 and the bad debts credit 30,000. So there is no any effect for the suspense account, right? Third one, the total of purchase journal 800,000 has been correctly recorded in the purchase journal. So the purchase journal double entries, purchasers debit, creditors should be credit. So here the purchasers you debited correctly, but creditors credit just 80,000. So the double entries suspense account debit and the creditors should be credit by 720,000. Right? And the last one, the total of cash received from debtors 150,000 being correctly posted to the cash account, but it is erroneously debited to the creditors control account. So from the cash received from the debtors, the double entry should be here. This should be changed. Here not creditor, it should be debtors. The printing mistake. Sorry, the typing mistake. So the correct double entry. So the from when you are receiving cash from the debtor, so the double entry should be cash debit and debtors should be credit. But here, instead of that, they debited to the creditors. To correct the debit into the creditors, you should credit the creditors by 115,000 and then to record the debtors correctly, you have to again credit debtors 150,000. Here it should be debtors. So the total of that should be credited to the suspense account. So the correct answer for question number 8 is answer 3 because the errors of A, C and D is effect to the suspense account, right? So next question they're asking from same details, decrease in net profit and the suspense account balance. Again අර මම මේවා ටිකම තමයි තියෙන්නේ. මේක එක correct කළා. ඒක තමයි correct කළා නැත්තේ. Right? So the suspense account when you're preparing the suspense account, you have to find out what is the opening balance of the suspense. So which means what is the balance that not tallying the trial balance at first, right? So first electricity debit suspense account credit. So suspense account credit electricity and from C and D both suspense account should be debit. So the opening balance of suspense account is 920,000. So that's mean the suspense account opening credit balance is 920,000. And then they are asking the decrease in the net profit from these transactions. And when they're asking the effect for the profit, from those double entries, you have to get the income and expense account. So because the income and expense, when the changes happens in the income and expense account, so that's which lead to effect to the profit. So first one, electricity debit suspense account credit. So the electricity is an expense. So when the expenses debit, so that's mean the expenses is increasing by 100,000. So increases by 100,000 mean the profit is going down by 100,000. B, discount allowed and bad debts are both the expense account. So it's effect to the profit. But here the discount allowed expense account debit, bad debts expense account credit. So that's mean from this correction, the expense account going increase and as well as the expense account going decrease. So there is a zero effect for the profit. So මේ දෙකේ income and expenses account වෙනස් වෙන්නේ නැහැනේ. So electricity නිසා තමයි මේ වාගේ මේ profit එක decrease වෙනවා නම් decrease. So the correct answer should be answer number 2 for the question number 9. Question number 10, again the details and the question they're asking, the impact on the gross profit and the net profit from the stock donations. So you have to keep in mind, so any transactions or any error that affecting to the gross profit is affecting to the net profit as well. Because you are getting the net profit after you are getting the gross profit. So any change that happens in the gross profit is also similarly affect to the net profit as well. So the stock donations double entry stock donation is an expense. So stock donation debit and the cost of sales credit. Either the cost of sales credit කියන එකේ meaning එක cost of sales expense decrease. So that's mean your gross profit is increase. Right? So cost of sales credit වෙන නිසා your gross profit is increased by 58,000. එතකොට ඒක නිසා අනිවාර්යෙන් net profit එකත් ඒ impact එකම net profit එකටත් effect වෙනවා. So net profit is again increasing by 58,000. Right? But the stock donation is an expense, and that expense you are recording in other expenses. So stock donation expense is not affecting to your gross profit, but it's affecting to the net profit. So because of the stock donations, your net profit is reducing by 58,000. So that means there is no impact for the net profit from stock donations, but gross profit is increased by 58,000. So the correct answer for question number 10 is answer number 1. So question number 11, again the details, and they're asking the raw material inventory and total manufacturing cost. So when you are finding the raw material inventory, the format of the way of finding the total production cost is raw material opening plus raw material purchases, and then you have to minus the closing raw material, then you are getting the raw material consumed, right? And here it's given the raw material opening to 2000, and it's given the raw material purchases 29,000, and it's given the raw material consumed 26,000. So here the raw material opening, raw material purchases, the total of both, you have to minus the closing raw material and to get the raw material consumed. But here it's given the raw material consumed, but they are asking the closing raw material. So the difference of the total of raw material opening and raw material purchases and the raw material consumed is your closing raw material. That's how you find the closing raw material. So the closing raw material should be 5,000. And then production wages, and you are getting the prime cost and production overhead. So machinery depreciation is directly we consider as production overhead, but here it says building total rent expense is 20,000. And the same building is used for both factory and the administrative office. එතකොට when you are finding the production cost, you have to include the only expenses that affecting to the production, right? So from the total building, 80% of the total floor area of the building is using for the factory. So the building total rent is 20,000. From that 20,000, 80% is you are recording under production overhead. So your total production cost should be 90,000. So your correct answer is number 4. So again details, and from those details they are asking the answers for question number 12 and 13. And it's given the opening and closing balances of inventory, trade debtors, and trade creditors. And during the month ending, collected 50,000 from trade debtors, and you paid 25,000 to the Trade creditors, and the firm sells goods keeping a profit margin of 5% on the selling price. And all purchases and sales are done on credit basis. So from question number 12, they're asking what is the purchases and sales. So when you're finding the purchases and sales, you have to find that from the debtor control account and the creditor control account, because here it says the all sales and purchases that are done on credit basis. So debtor control account is given the opening and closing balance. So opening balance in debit side 60,000 and the balance carried down in credit side 75,000. And you are receiving cash from debtors 50,000. So when you are receiving cash, mean cash debit and the debtors credit. And from that details, you can find out the sales that you did is 65,000. And purchases you have to find out from the creditor control account, because the all purchases are happens on credit. So the opening balance is a liability. So in credit side 5,000 and the closing balance 15,000 in debit side balance carried down. And you are paying 25,000 to trade creditors. So that's mean the cash credit and the creditors debit. So from those information you can find out the purchases is 35,000. Right? So the correct answer for question number 12 is answer number 5. The sales are 65,000 and the purchases are 35,000. And question number 13, they are asking the closing stock of the inventory. Either So from here, you have to get the format of the trading account. So trading account means sales up to gross profit. So sales, opening stock plus purchases, closing stock, cost of sales, and gross profit. So the information that we have already are sales. We know 65,000. Opening stock is given 83,000, and the purchases also we found from the previous question 35,000, and then closing stock is the thing that we have to find out from here, right? And it says the profit margin of 25% on selling price. So if the sales is equal to 100%, so that's meaning the cost of sales is 75%, right? So we know the sales is 65,000. So 65,000 is equal to 100%. Now you can get the cost of sales 65,000 into 75%. So that's how you found the cost of sales is 48,750. So if you know the cost of sales 48,750, then you can find out the closing stock, because opening stock plus purchases, from the total of that you have to minus the closing stock to get the cost of sales. So the difference of that is your closing stock. So that's how you found the closing stock 69,250, right? So here again details. So question number 14, they are asking the surplus of this uh, welfare association and the balance of the cash account. So you have to prepare the receipt and payment account and the income and expenditure account. So the opening balance of the cash account is 1,500, and you received donation 2,000 debit, and you received interest for that FD or something 880. So those are in receipt sides. And you paid for the scholarship that arrears from for the last year 20. So that is an the cash payment 20. But keep in mind that is not an expense for you, because that arrears you paid in this year, that's correct, but that arrears is you paid for the last year. So that comes in the receipt and payment account because it's a cash payment, but that's not comes in the income and expense account because that is not an expense for this year, right? And here the tricky point is you have to find out the scholarship. So there are 90 students and you have to pay 24,000 per year for them. So 19 to 24,000, whether you paid in cash or not, that is your total expense. So that is the amount that you should record in the income and expenditure account, right? But when you are paying the scholarship for this year, you are paying for full year only for 75 students and only for 10 months for 15 students. So the total of that scholarship is 2,100. So the cash payment of the scholarship that relevant for the current year is only 2,100, but the total expense should be 2,160. So that's how you record those things. Then the receipt and payment account balance, you can get the 1,560 here, and the surplus is 20. So the correct answer is number 3. So last one of this video, yes, right? So which of the following statements are correct in relation to the financial statement of a partnership? So they are asking the things about the partnerships. The profit of the partnership can be appropriate as interest on capital, salaries, and profit share of the partnership. So that's correct, right? Because interest on capital, salaries, and the profit are the way of distributing the profit that you found from the income statement. That's correct. B, a statement of cash flows cannot be prepared for the partnership. No. Our common practice is we are preparing cash flows only for the companies. But for the any sole proprietorship, any partnership, any company, any non-profit organization, you can prepare the cash flow. If it is the cash receipt and the cash payments happen, so that means you can prepare the cash flow for any organization. And the goods drawings of the partners should be adjusted when appropriating the profit of the partner. No, that's incorrect. Goods drawings are double entry, current account debits, and that should deduct from the cost of sales name. So that's not an answer. Last one, the interest of the loans given by the partners to the business is recognized as an expense for the of the partnership. So that's correct because interest to the loans is an expense, and yes, so it's an expense. So the correct answer should be this incorrect. No, not A and D. The correct answer should be A. Yeah, that's correct. So because they are here it says cannot be prepared. So the correct answer should be A and D. That's correct. So the answer for question number 15 is answer number 2. So this is the quick discussion because of you I allows that exams comes on 20th and yes, May 20th MCQ question. So we'll meet from the other videos as well. Keep in touch. Okay, so here is the rest of the 2022 Payroll first paper discussion. So 16 question, which of the following statements are correct as to benefits entitled by the partners of a partnership? First one, when a partner is retiring, he or she will get the benefit arising from the unrecorded assets of the partnership in proportion to the profit share. So here it's defined the goodwill. So yes, that's true because when the partner retirement happens, the portion of the goodwill is transferred to his capital account. So that's first one is correct. B, an interest could be given a loan provided by a partner only if it is stated in the partnership agreement. So that's incorrect. Interest to the loan provided by the partners, it's a compulsory to pay because that's a statement in Statement 24 1890 Partnership Ordinance Act. So 1890 Partnership Ordinance Acts under 24 statement, they are asking, so that means they are requesting to pay at least 5% interest to the loans provided by the partner. So that's incorrect. See, the partners are not entitled for salary as per the section 24. Yes, that's correct. Can agreement again නැත්තම් partner salaries and interest on capital is not need to give to the partners, right? If the salaries, if the partner salaries and the interest on capital is in agreement, so that for that we have to pay the interest on capital and the partner salaries for the partners. But if it is not in the agreement, so that's not need because in the section 24 they are telling that the partners are not entitled for interest on capital and the salaries. Last one, the partners are entitled for an interest on capital if stated in the partnership agreement. Yes, that's correct. So my select you come to my theory. In the partnership agreement, if they are asking to pay the interest on capital based on the partner, so that's company we have to entitle. So the correct answer should be A, C, and D. So the answer for question number 16 is fourth one. And which of the following statements are incorrect as LKS 1 presentation of financial statements? They are asking the correct statements. An entity should prepare all its financial statement using accrual basis. No, that's incorrect. The components of financial statement are total comprehensive income statement, statement of financial position, changes in equity, notes and disclosures, and a cash flow statement. So cash flow statement we are preparing based on the cash basis, not accrual basis. So that's incorrect. B, an entity should not offset assets and liabilities when preparing financial statements unless permitted by another standard. So that's correct. Last one, an entity should present with equal prominence of all the financial statement in the complete set of financial statements. That's also correct. So the correct answer for question number 17 is answer number 5. Third one, they are asking the production cost of an order of shares incurred by the apparel export company during the month and the information given. So they are asking the cost of this stock of shares as a closing date, right? So these are the things that happens in the March and It says the total quantity of shirts manufactured during the March of 2022 was remained as stock as on closing date. Again, within the month, they are not selling any stock. So the total production is stays as the closing stock as at 31st March 2022. So that means simply we have to find out the production cost of that t-shirt stock. So raw material purchases and raw material carriages you should add, and from the raw materials damages you should I mean, deduct it, and then deduct labor and the manufacturer overheads, and then you are getting the total production. Here is unnecessary information is given. The storage cost incurred for these shirts were 250,000. So that is not a production cost. That is a non-production cost. So that's not. We are not taking that as your production cost. Your total production should be 4,000. Right? So the question number 18,000 is number 2. 19. Which of the following items should be classified as cash flows arising from investing activities of a manufacturing entity? Yeah, manufacturing කරන business එක LKS 7 එකට අනුව investing activities වලට දාන්න නැත්තේ මොනවද කියන එක. Sorry. Yes, they are asking what are the items that should classified as cash flows from investing activities. Number A, cash paid to purchase ordinary shares of other companies. Yes, it's indeed an investing activity. Can අපි වෙන company එකක shares වලට invest කරනවා කියන්නේ it's an investing activity. B, cash paid to purchase treasury bills with a 1-year maturity period. Yes, so that's also an investing activity. C, cash paid to settle the lease liability related to the right of use of assets. So when we are paying the lease liability, it's a financial activity. So the correct answers are A and B. So answer number 3 is for question number 19. So 20th question is also given from the standard LKS 8 accounting policies changes and accounting estimates and errors. So the change of depreciation method from straight line method to reducing balance method, and the changing of the useful life of property plant and equipment, we stated as accounting estimate change. So that's correct. And change of the cost formula from 5 to WACC or WACC to FIFO, we consider as the accounting policy change. So that's also correct. And if the errors happens in the last years, and if we can correct those errors, so that's mean we have to correct the past statements as well. So that's what we call retrospectively method. So that's also correct. And the answer is number 5 for question number 20. Uday PLC entered into a lease agreement, but they are asking, so these are the details. So first you have to read the question first. So lease liability presented as a current liability as at 31st March 2022. ඉතින් ඒගොල්ලෝ ඒ අවුරුද්දේ ගොඩක් අය ඔක පටලගත්ත එක තැනකදී they found the current liability portion as at 31st March 2023. So that's incorrect. They are asking the current liability portion as at 31st March 2022, right? So these motor vehicle you purchase on 31st March 2022, so the last date of the year, and the down payment given 3 million. So this is also unnecessary information for this to get the answer of this question, right? කියන්නේ දැන් අපි අරක ඒකත් එහෙම වෙද්දී MCQs වල ඒ දීලා තියෙන details වල ඒ ඔක්කොම details අනිවාර්යෙන්ම include කරන්න ඕනේ කියලා හිතුත් නැහැ. ඒක වෙනස් වෙනවා. So we have to know what are the relevant information and what are the irrelevant informations, right? So in this case, the total installment, you have to get the total installment because it's given the total interest. So the total installment mean 1055.19 into 5 because these are 5 years. So the total installment is 5,275,950. From that, you have to minus the total interest. Now you are getting what? The lease liability. So the lease liability as on purchase date is 4 million. When you are purchasing this motor vehicle, You paid 3 million as the lease, sorry, as the down payment and the lease liability. And let us know that we are purchasing this from the LB Finance. So the opening liability of the LB Finance is 4 million. කියන අපි ණය වෙන්නේ 4 million. අපි liable වෙන්නේ 4 million. Right? But as at 31st March 2022, we are not paying any installment or the interest because here it says the first installment you should pay on 31st March 2023, right? So as at 31st March 2022, the lease liability is 4 million. And now we have to find out the current liability portion of this. So next interest is 4 million to 10% because this implicit interest rate is 10%. So 4 million to 10% is 400. So the lease liability current portion should be installment minus next year interest, right? So the installment is 1,055,190 minus 400. Then you are getting the current liability portion as at 31st March 2022, 655,190. So your answer, the correct answer should be number 2. So here in this case, the total income and total expenses given 5 million and 3,500,000. But that 5 million total income, it includes the surplus resulted from first time revaluation of land 800,000 and gain on sale of machines 200,000. And the expenses includes the first time revaluation deficit of 300,000. So first time revaluation deficit is considered in when you're finding the profit, because first time revaluation deficit you are recording in other expenses. So that's including when we are finding the profit. But here the total income is 5 million. So that total income is 5 million. So that in 5 million, it includes the land revaluation surplus at the first time. So the first time revaluation surpluses, it's a kind of income, that's correct. But when you are finding the profit, we are not including that. The first time revaluation surpluses, we are recording on the other comprehensive income, right? So when you're finding the profit, because they are asking the profit, so from the income, you have to minus the revaluation surplus, right? So 5,000 minus 800, 4,200 from that total expenses minus, and then you are getting the profit 700, right? And the other compensation income is land revaluation surplus 800. And they are asking the other compensation income, right? So the highlighted when on minimum 800. So land revaluation surplus, the other compensation income is 800 and the profit is 700. So the correct answer is number 1 for question number 22. This is a kind of adjustment that you are facing in company accounts when you're preparing the statements in the company accounts. So here the information given about the income, and they're asking the income tax expense recognized for the year ending 31st March 2022. So which means the income tax expense that you should identify in your income statement. That's what they're asking here, right? So there are 4 quarters per year. So the tax paid for first 3 quarters, 2,750,000. So that means you paid tax in cash for first 3 quarters, 2,750,000. And for last quarter, you didn't pay, but you estimated the tax expense as 1,200. So altogether, the tax for the year 2021 and 22, 3,950,000. If there are nothing about the last year tax cases, so this 3,950 is the total expense that you should record in the income statement. But the case is there is a thing that happens in the last year as well. So the last year tax provision is 800. You did the provision for last year 800. But the actual amount that you paid for the last year in this year is 900. So that's mean you did a under provision how much? 100. So that under provision 100 is you are adding to this year's expense. So your total tax expense that you should recognize in your income statement is for 4,050,000. So the answer for the question number 23 is answer number 5. So this question they're asking about the ratios. The ratios karna anivaryam the equations of the ratios you should memorize. Nothing karana back. So question number 24, they asking two ratios, interest coverage ratio and the debt equity ratio. So interest coverage ratio, it's a leverage ratio. Right? So how do you find the interest coverage ratio? Profit. So that's mean the profit after tax. Profit after tax plus interest plus tax. You have to divide by the interest. So here from the interest coverage ratio, we are finding how many times that we can pay our interest for a earned profit. Normally we are paying interest only for one time, but from here the interest coverage ratio we are finding how many times that we can pay the interest, right? So the profit is given the profit before tax 15,000 and the tax given 3,000. So 15,000 minus 3,000, the tax profit after tax is 12,000. To 12,000 you should add the interest. So interest, how do you find? Here the bank loan is given 150,000 and the information it says the bank loan was obtained as at opening date. So the interest should be calculated for the total year, right? So 150,000 into 10% is 15,000. So our interest is 15,000 and the tax is 3,000 and you have to divide by the 15,000. So interest coverage ratio should be 2 times. Debt equity ratio is we are finding what is the amount of the capital introduced by the owners um, compared to the capital that we gain from the external parties like bank loans. So that's what we are finding from the debt equity ratio. So here it find how we find that debt capital divided by the equity. So our debt capital is your long-term loans, 150,000 divided by equity capital is given straightly 200,000. So 150,000 divided by 200,000 is 0.75. So the answer should be 4 for question number 24. Question number 25, they are asking the return on equity as a percentage. So profit divided by equity multiplied by 100%. So your profit is 12,000. And here, keep in mind, when you're finding the return on equity, you have to get the profit after tax. So 12,000 divided by 200,000 into 100%. So it's 6%. And inventory turnover ratio, you make a pay name cost of sales divided by average inventories. So cost of sales is 160,000. How do you find the cost of sales here? It says the profit margin is 20%. So profit margin is 20%, meaning the cost of sales is 80% based on the sales. Why? The sales minus cost of sales your gross profit. So if the gross profit ratio is 20% based on the sales, so that means the cost of sales is 80%, right? So your cost of sales is 200,000 into 80%, 160,000. And the average inventory is given straight to 20,000. So 160,000 divided by 20,000 is 8, right? So your answer should be third one. Here they are asking the production cost per unit and the information given as totals. So total for 1,000 units. So here they are producing 1,000 units. So these all information is given for all 1,000 units. And also it's given the production cost as well as the non-production cost. But here they are asking the production cost. So you have to only consider the production cost only. So total raw material is production cost, that's mean prime cost. Total direct labor production cost, variable production cost, variable non-production we are not considering here because it's a non-production. Total fixed production is production, but the total fixed non-production is not. It's non-production. So here is all given for the total 1,000. So you have to divide it by 1,000 and get the per unit cost. So that's how you are finding the production cost per unit 600. So the correct answer for question number 26 is answer number 1. 27, they're asking the EOQ, economic order quantity. So how do you find the economic order quantity? Square feet 2 into D. D means demand into CO. CO means cost of ordering. divided by CH. So CH means cost of holding. So those all information given here. So you have to extract those information to your equation and then find out. So your EOQ is 600. Answer number 4 for question number 27. It's given the information about the salaries. Huh? So details, and then first read the what the question, the total salary expense of the company. So they are asking the total salary expense, and they are giving the EPF and ETF contributions you have to do based on the basic salary and the allowances. Huh? So basic salary and the allowance of the simply it's a gross salary. So you have to do the EPF and ETF based on the gross salary. And deductions of loan installment is not an expense for the business point of view. It's a it's deducting from the employee point of view when you are giving when you are paying the salary, net salary. So that's no need to consider here. Your basic salary is 880, allowance 20, and gross salary is 900. From that 900, EPF employer contribution. We have to consider only here the contribution that made by the employer, which means the organization. Employee contribution is not an expense for the business point of view. Huh? It's the deduction from the employee. But employer contributions are the expense from the business point of view. So the EPF employer contribution is 108 and the ETF employer contribution is 27. So the total expense should be 1,035,000. So your correct answer is number 3. 29. Which of the following statements is false in relation to the cost volume profit analysis? Statement. The total contribution is equal to total fixed cost at break-even point. So that's correct, right? How do you find the profit? Profit, you are finding total contribution minus total fixed cost. So at the break-even point, there is no any profit or loss. So which means the total contribution is equal to total fixed cost. That's correct. Second one, total profit beyond the break-even point is equal to total amount of total contribution less total fixed cost. That's also correct. Third one, sales value at break-even point is calculated by dividing the total fixed cost by contribution sales ratio. It's also correct. To find the break-even point in units, you have to divide fixed cost by contribution. But to find out the total amount at the break-even point, that means the sales amount, you have to divide the fixed cost by the contribution sales ratio. That's correct. Margin of safety in value can be calculated by dividing the profit by the contribution sales ratio. That's also correct because those are the equations that given in the teacher's guide as well. Or the last one, total revenue, sales revenue is equal to total fixed cost at break-even point. That's incorrect. At the break-even point, again, the equivalent total fixed cost and the total contribution. That's what it's mentioned in the first statement. So the first statement is correct. So which means the last statement is incorrect. So the correct answer for question number 29 is answer number 5. Last one, which of the following statements correct in evaluation of capital investment project? A. The accounted rate of return can be calculated by dividing the average cash flow. No. When the accounted rate of return, we are considering what? Profit, not the cash flow. So that's incorrect. B. Evaluating profit based on payback period, the cash flows generated after the payback period are ignored. That's correct. When the payback period fulfill, other cash flows අපි consider කරන්නේ නැහැ. So let's assume that the total useful life is 5 years, but that project payback period is 3 years. So our last two is we are ignoring when you're finding the payback period. See, the positive net present value of the project indicates that the project generates a return higher than its expected return. So that's correct. That's what we are finding from the NPV, right? So the correct answer should be B and C. So the answer number 2 is for question number 30. So that's it from question number 1 to 30. and join me with question number 31 to 50 that you're writing the answers. So I will upload that in another main video. Thank you. Here from this video, I'm discussing question number 31 to 50 in past paper 2022. So first one, they are asking about the management accounting information. So management accounting, whether the statements are true or false. Follows the internal guidelines of the firm in providing information. That's true. Provides both monetary and non-monetary. Yes, that's true. In financial accounting, they are only focusing on monetary information, but in the management accounting, they are focusing on monetary and non-monetary as well. Provides information to make managerial decisions of the firm. Yes, that's correct. And provides only future information. That's incorrect. They are providing past, future, present, any information in the management accounting. So here the 32, during the month of March 2022, 16,000 petty cash expenses were paid and the balance is 4,000. After that 16,000 payments, so that's mean the petty cash interest is the total expenses paid 16,000 and the balance was 4,000. So altogether petty cash interest is 20,000. So when you are reimbursed that petty cash interest, petty cash control account debit and cash control account credit, and you have to record with the amount. So here the total petty cash interest is 20,000, but here you have to reimburse the expenses that you paid, right? Because there is they have that 4,000 balance in there. So අර මදි ටික තමයි කියන්නේ අපි expenses pay කරපු expenses තමයි ආයෙ reimburse කරන්න ඕනේ. 33, state with the value the impact of following transaction of the equity balance. So these equity balance එකට කොහොමද effect වෙන්නේ? If it is increased, you should mention I. If it is a decrease, you should mention D. And no change if there no change, so you have to mention NC and with the values. Donation of a computer with a selling price of 175,000 to a school, it costs 150,000. So donations is an expense. So expenses mean it's affecting to the equity minus. So that's mean equity decrease and the amount should be 150,000, not 175,000. 175,000 is the selling price. But you have to record the stock donations, stock losses, stock damages, all at the cost. So 150,000. And B, a photocopy machine which was used by the owner was invested to the firm. The cost of this machine was 750 and its fair value when it was invested in the firm 500,000. So it's increased and that photocopy machine that owner purchased 750. But the amount, the fair value at the investment is 500,000. So you have to record, you have to identify the photocopy machine investment as 500,000. And here 34, it's a bit difficult. They are the information given about the credit sales. So the all sales happens credit and the list price they are giving 20% discount here. And 1 month credit period is allowed to debtors from the date of sales. A 10% cash discount is given to the debtors for the amount settled within 15 days from the date of sales. So here the date of sales and the list price is given. So when you are identifying the sales, you have to deduct that trade discount. We are not recording trade discounts as debit or credit, but you have to deduct that discount. So 6 million, so 6,875 into 80%. The total sales is 5,500, right? And here we have to find the discount as well as the cash receipts from the debtor. So here it says first sales 5,000 and 5,000 into 80%. Why the trade discount is 20%? So the amount that you should consider is 80%. From that 80%, they are settling 60%. The total you are settling 60%. And half was settled within 15 days. So you have to calculate the discount allowed to that half. 60% volume, half you have to calculate. So your discount allowed should be 120, right? And the second sales, 1,875 into 80%, and then they are settling 40%, and that total 40% you are giving them a discount, so 10%, so 60. So the altogether, the total discount allowed is 180. And the cash paid 5,000 into 80% into 60%, half, and you are giving discount 10% to that half. So that's mean you are receiving cash 90%. So 1,080, and the other half 1,200. And from the 1,875, 40% after deducting 10% discount, 90%. So 540. So altogether 2,820, right? So 180, 2,820. So now you can get the balance of the debtors as 2,500. And if I state the element of financial statements, elements කියලා අහන්නේ asset එකක්ද liability එකක්ද income ද expense ද මේ equity ද කියන එක. So creditor control liability account accumulated depreciation ඔක ගොඩක් අය පටල ගන්නවා liability එකක් කියලා, but it's an asset minus එකක්. Drawings equity minus එකක්, and the discount received is an income account. Here they are asking the accounting concept on given situation, valuation of year-end inventory at lower cost than the net present value. It's prudence concept. So prudence concept again, we have to identify the future losses and the expenses. So prudence concept. Classification of fabric stock as current asset and sewing machines as non-current asset. So the concept behind assets and liabilities classified as current and non-current is going concern concept. Recognition of depreciation of sewing machines in the production cost matching concept. So any expense you are recording in income statement, so the concept behind that is matching concept. Recognition of sales revenue based on the satisfaction of performance obligations in the contracts entered with the customers, its realization concept. You have to identify the income at the point of earned, right? So it's a realization concept. That is when they are asking to fill in the blank. So A, the present obligation of the entity to transfer an economic resource as a result of past events. So this is the main definition of the liability. The answer should be liability. An entity that is required to prepare general purpose financial statements is identified as the accounting entity. And the two qualitative characteristics, relevance and faithful representation. Qualitative characteristics we can classify it as fundamental characteristics and enhancing characteristics. So fundamental දෙක තමයි relevance and faithful representation. Enhancing හතර තමයි understandability, comparability, ඊට පස්සේ timeliness and reliability. හරි accuracy දෙකෙන් එක. So from these details, you have to answer 38 and 39. So 38, they are asking the goodwill and the double entry to record the goodwill. So here it says Ranga and Eranga are the existing partners, and then Eranga was admitted as a new partner. Sorry, Suranga. And Suranga brought 1,500 cash for capital and 500,000 cash for his share of goodwill. So his share of goodwill means at the new ratio we have to debit ne. So Suranga's share of goodwill is 500, and that 500 is equal to 2 out of 10 because the new ratio is 532. So Suranga's share is 2 out of 10. So that's equal to 500. So that means the total goodwill is 2,500,000. And here the double entry, you have to debit goodwill to the new ratio and credit at the old ratio in any given retirement or recruitment point. So Ranga Eranga Suranga new ratio is 532. So 2,500 into 532. Ranga 1,250. Eranga 750 and Suranga 500. And capital account should be credit to the old ratio. So old ratio is 3:2. So Ranga 1,500 and Eranga 1,000. And from 39 question, they are asking the capital balance of each Ranga, Eranga, and Suranga. So the opening balance of Ranga 3 million, Eranga 2 million, and the cash and Ranga here brought 600,000 cash as additional capital. And in the other hand, when the Suranga joined into the business, he brought 2 million cash. And the goodwill adjustment as we discussed earlier. So now you can get the closing balance of Ranga, Eranga, Suranga as these amounts. So here you have to state whether these statements true or false based on the Sri Lanka accounting standards. A, the change in the residual value of an item of proper plant and equipment is treated as change in accounting estimate. That's correct. Change in depreciation method, changing useful life, changing residual values, those all are the change in accounting estimates. That's true. The dividend declared on ordinary shares after the reporting period, but before authorizing the financial statement for issue are recognized as a liability. That's incorrect. The dividend declare thing we recorded as in a separate note like deducted distance. So we do not do the double entries for that. The interim dividend payment you did the you are doing the double entry, but declare so that dividend the final dividend declarement we recorded as the as the separate note, so it's false. The cost of inventory should be measured using either FIFO and WACC, so its identification method is not appropriate. Yeah, that's true. වඩ ඕන එකක් use කරන්න පුළුවන්. D. The present obligations of uncertain timing or amount are recognized in the financial statements as provisions, even though it is not possible to estimate them reliably. No, no, no. These are the things, but contingent liabilities. These are not the provisions. In the provisions, you can estimate, right? So that's false. So in 41 question, they given some events and they are asking adjusting and non-adjusting. So first one, the court order here, first of all, the closing, the financially is ending at 31st March 2022. And the financial statements were authorized by the directors on 15th May 2022. So they are asking adjusting and non-adjusting. The court order was received to pay 1,500,000 to settle a legal case which was filed against the company on 1st of Jan. So that's mean it relevant to your financial year, right? So that's mean you have to adjust that. It was revealed that the inventory as of 31st March 2022 has been overvalued by 2 million. It's also you can adjust. The destruction of a machine with a carrying amount of 8 million as at 31st March due to a fire. So fire damages are we can't adjust. We are adjusting that for the next financial year, not for the current financial year. And the capitalization of 10,000 reserves after that, right? That's also you can't adjust. So it's also non-adjusting event. So here the interesting story, buildings with an estimate of 110 million you purchase on 1st of April 2021 for 100 million. So they're asking at first the amount of which the building is measured at recognition. So keep in mind at the recognition you have to find out, may follow the cost model and the amount that you pay. So that's mean rupees 100 million. And the date of which the depreciation of the building should be coming. So here you purchase the building on 1st of April 2021 and they are saying that the company commenced using the building from 1st of July 2021, but it was available for use from the date of purchase. Here, the important thing, you have to start depreciate the proper plant and equipment from the date of available for use. So let us say it's given the 3 dates: date of purchase, date of available for use, and date of use. So from those three, you have to start depreciation from availability date. So here the purchase date and the available date, available for use date is the same one, 1st of April 2021. So that's mean you have to start depreciate your building from 1st of April 2021. And see, they are asking if they follow the cost model or the revaluation model, what are the closing balances, closing carrying amounts that building. So if you follow the cost model, so that's mean you have to do the depreciation. So here we identified that building as 100 cost. So 100 divided by 50. So the current year depreciation is 2 million. So 100 minus 2, carried amount is 98 million. But they are saying that as a closing date, the building's market value, fair value is 120 million. So that means if you follow the revaluation model, you have to identify that building as 120 million. 43, they are asking whether the A and B are the provisions or contingent liabilities and the reasons behind that, based on LKS 37, provisions, contingent liabilities, and contingent assets. So, A, the company has a past practice and published policy, huh? So that's mean the present obligation of refunding for the defective items returned by the customer. However, there is no legal agreement. The legal agreement එකක් නැති වුණාට they publish policy එකක් තියෙනවානේ. So that means it's a present obligation. So you should do a provision for that. B, the company is currently in a dispute with a competitor firm due to the infringement of a patent right. It is expected that the substantial compensation will have to be paid if a case is filed against Idunil PLC. If sorry, if කිව්වම මේ present obligation එකක් නැහැ තාම. But probable outflow එකක් තියෙනවා. So you can do the contingent liability. You can refer that as a contingent liability because there is no any present obligation, but there is a probable outflow depending on that if situation. 44, they are asking the rent income recognized and the unearned income recognized as at 31st March 2022. And here the based on SLFRS 15, revenue from the contract with customers. Amar PLC is a company engaged in renting of power generators. The daily rental of the power generator is 20,000. On 29 March 2022, the company entered into a contract to rent generators of Saman PLC for the period of 7 days. The company received 100,000 as an advance on this date, and this advance includes a refundable deposit of 50,000. The generator was delivered to the business premises of Saman PLC in the early morning of 30 March 2022. So that's mean you are using this for 2 days. Saman PLC is using this product for 2 days. So that's mean from Amali PLC point of view, you have to identify the income only for 2 days. 2 days විතරයි අපි use කරන්නේ 30 March 30 and March 31st. So per day 20,000 daily renter. So 20,000 into 2. The income, rent income you should identify is 40,000. And B, so here they are saying that you received 100,000 as an advance, and in that 100,000 is including the refundable deposit 50,000. So that means Saman PLC paid for rent 50,000, but from that 50,000 you earned as at 31st March 2022 only 40,000. So that means the unearned revenue is 10,000. Refundable deposit එක අයින් කළා තමයි ගන්න. Right? So B is 10,000. Here this question you have to find out the quick assets ratio and the debt collection periods days. So quick assets ratio you have to get the quick assets. So only debtors and cash equivalents. Prepaid expenses and inventories are not the quick assets. So when you are finding the quick assets from the current assets, you have to deduct inventories and prepayment from the current assets. So your quick assets is 6,000 and the current liability is straightly given 4,000. So 6,000 is to 4,000 is 1.5 is to 1. And debt collection period, average debtors divided by credit sales into 360. මෙතන especially කියලා නැත්නම් 365 ගත්තත් වරද්දක් නෑ. But normally when you are finding the debt collection period and inventory obtaining period that result in days, you have to get the days per year as 360. අර බෙදන්න ලේසි කරන්න. So 4,000 average debtors. So how do you find the average debtors? Opening debtors is 3,500. Closing debtors 4,500. So altogether total debtors 8,000 divided by 2. You are getting average debtors here 4,000. And credit sales, all sales were happened on credit. So the credit sales is 20,000 into 360. So 72 days. Here they are asking the source documents that relate to the material cost control. The production division requests raw materials from the stores, material requisition note. The store's request the purchasing department to purchase the raw material. So purchase requisition note. And the purchasing department places an order to suppliers to purchase raw materials, purchase order. And when that ordered stock, when it is received to the business, stores receives raw material from a supplier, we are issuing goods received note. ඔයාලන් ඉතින් පාඩම් කරන්න ඕනේ. අන්ත මේක පොඩ්ඩක් ට්‍රිකි තන source document වලින් අර අමාරු තන පොඩ්ඩක් මතක නැති තන. Right. So 47 is given the cost item of each A, B, C, D and the direct and indirect and the variable fixed. Cost of fruits. So here the fruit juice by එකක්නේ. So cost of fruits is direct as also it's variable. So direct material and direct labor we consider, normally we consider that as variable cost. Cost of advertising in a newspaper, indirect and fixed. Monthly salary of the person preparing fruit juice. Here it says a monthly salary. So that means the salary is not vary based on the fruit juices that he produce. So it's direct because it's direct labor, but it fixed. Normally we consider direct labor as variable, but here it says the monthly salary for the person, sorry, that you are paying for that juice maker. So it should be fixed. And the D, annual license fee paid to the urban council, it's indirect and fixed. Easy, right? 48 is given the information and they are asking the reorder level, minimum stock level and the maximum stock level. So reorder level you are finding from maximum consumption into maximum lead time. It's 36,000 kilograms. Highlight. Minimum stock level, the equation reorder level minus average consumption and average lead time. So here in this case, average lead time, average consumption and the average lead time given directly, so 20,000 kilogram, but maximum stock level, reorder level minus minimum consumption into minimum lead time. So here the maximum consumption is given and the average consumption is given. So how do you find the average consumption? Maximum consumption plus minimum consumption divided by 2 is the way you find in the average consumption. So average consumption into 2 minus 600, you are getting the minimum consumption. Same as minimum lead time. Average lead time is 40 days. So into 280, 80 minus 60, minimum lead time is 20. Plus 16,000. So your maximum stock level like 48,000. අනිවාර්යෙන් මෙතන මේ stock levels වලින් equation එකක් කරනවා. ඉතින් ඒක නිසා ඒ equations ටික නම් ඉතින් මතක තියාගන්න. 49. A private company manufactures a product and sells a price of 500 per unit. The maximum production capacity of a company is 1,250 and it is expected to operate at 80% of the capacity. And here is the information given at 80% capacity. So 1,250 is the total. So that means 1,250 is equal to 100%. From that 80%, so that means 1,250 into 80. So the current active level is how much? 1,000 units, right? They ask in the break-even point. So first you have to find out the contribution, selling price minus variable cost. So when you're finding the variable cost, direct material and direct labor variables, because it's given all variable cost. And the total production of it's a variable total 50,000 is given, and that 50,000 is given at the current active level of 1,000, not 1,250, because it says the information given at 80% capacity level. So that's mean 1,000. So 50,000 divided by 1,000, you are getting the variable cost. So altogether, the total variable cost is 200. So 500 minus 200, you are getting the contribution 300 here. And how do you find the break-even point? Fixed cost divided by the contribution. So fixed cost is 120,000 divided by 300. Your BEP is 400 units. So margin of safety, you are here, the current active level is 1,000. So 1,000 minus 40, 600 units. And they're asking the break-even point in rupees if the selling price is reduced by 10%. So your new selling price should be 500 into 90% because you are reducing 10%. So it's 450. And the new contribution is 450 minus 200, 250. And the break-even point you can find out 120,000 divided by 250, 140 units, right? So they're asking total sales, right? So 480 into 450, 216,000. Got it? Because they are, no, They ask in the break-even point in rupees. Sorry, so here you found the break-even point, and that break-even point you have to multiply by the selling price per unit. So the last one, a company is considering long-term investment project relating to the purchase an asset. The following information was extracted from the project evaluation period. Project lifetime and payback period given as 5 and 3.5 years. Annual operating net cash inflows of the project 400,000. Salvage value in the scrap value, disposal value 250,000, and the present value of expected net cash flow inflows of the project 1,672,000. Make a outflows then good kill on it. So initial investment again, they make a payback period on a 3.5 million, sorry, 3.5 years, and the annual operating net cash inflows 400,000. Make a special again and outflows 3 okay. So cash flow 400. So 400 into 3.5. The initial investment is 1,400,000. And they ask you the total net cash inflows in the year 5. So net cash inflow 400, and at the year 5 you are adding disposal value as cash inflow. So salvage value 250. So the total net cash inflows of year 5 is 650. And when you are finding the NPV, present value of cash flows, you have to minus the initial investment. It's simply given the present value of expected cash flows of this project 1,672,000 minus you found the initial investment at first 1,400,000, and your NPV should be plus 272,000. So keep in mind when they ask in the NPV, you should mention the plus or minus value. It's the important thing over there. So that's for 2022 error paper. So here I brought you 2022 error paper from 3 videos. So first one from MCQs 1 to 15, and the second one MCQs 16 to 30, and this is the last video for 2020 error. So keep in touch. I will try to upload as many as possible as that I can before your exams. Okay, thank you.